Good morning, everybody. This is Mark Lambert from Theta's Pendulum. We're in partners with Anthony Marino in our market timing and pricing service, which is also more of an educational service. Also, we give our opinion of market calls, but at the same time, what we try to do is instruct other traders on some of the methodologies that we use to gauge where the market is going and how we set up our trades, etc. I'm just going to show you. I just got up probably about an hour and a half ago, about 7:30 in the morning, Eastern Standard Time. And what I did is I just took a look at what happened in overnight action, which is basically this area right here, and then it started moving back up. But obviously I slept through this, so I didn't participate in that. But when I take a look at it from the last swing, we have a pretty well-defined, I would consider a five-wave sequence that has moved down. Consider this wave 1, wave 2, then internally of wave 3, I have wave 1, 2, 3, 4, 5. This will be the end of wave 3. And then the sideways moving action was wave 4, where it chewed up a lot of time, which is typical of a wave 4. Then this wave 4 basically was A, B, C to this level. And then now what I want to do is, at minimum, what I'd like to see is for a wave 5 to reach the previous wave 3, which is telling me that that would be a minimum wave 5 in. That would be telling me to cover profits had I been sure. And as you can see, this level right here, you can see the line from my cursor, it did breach it. So what we do at this point in time is I want to see 5 waves in that last sequence coming down. And we do have 5 waves. We've got wave 1, 2, I would say this is probably wave 3 or truncated wave 3 right around here. And then the sideways moving action is part of wave 4 and wave 5. And now what I'm looking at now is getting up long for the rest of the day. I've just closed out a trade just a few moments ago, and I'll show you why I took it and how I set it up. And this is what we do every single day, intraday. Basically, I'm looking at the market. It's probably going to start moving up today, at least for a larger degree correction. I would look at least this level right here to be taken out, or at least double top that. But anyways, what I'm looking at right now is we have a wave 1, a wave 2, a wave 3, some more sideways moving action, a wave 4, and a wave 5. Very, very well defined. This is a 5-wave sequence that ended up moving up. Obviously, this was still in the overnight action, so I can only trade what I can see happening. But now that I've seen 5 waves up, my next assumption would be I want to see I want to see a 3-wave pullback to confirm to me that this is going to be just a corrective pullback and be a good spot to get back up long again. What I would do is I would look at this as wave A, wave B, and now we're down at wave C. This is where I ended up taking the trade this morning. It did a very, very close to one-to-one Fibonacci projection. As a matter of fact, it only missed by 1 tick. The level's 813.10 and went to 813.20. Just the difference between the bid and the ask. And I ended up catching the trade right at around this level right here. And when I took the trade, I was only risking 4 pips at that pips. I mean 4 ticks at that time, because I knew if I was correct, we should not reach this low. I took that shot. I closed it out right here, right exactly at the top, and I'll show you the reason why I closed it out right there at that top. Doesn't mean it's an all-time top, but I risked 4 ticks and I made 3 points out of the deal. So that's a good risk-reward ratio. But what I would look at now is that we've already had an impulsive move up, corrective wave back. At minimum, I want to see another impulsive move up. What I do now is I take a look at that first impulsive wave. I consider that's wave 1, wave 2, or this could still be wave A, wave B. I bring the Fibonacci levels to those 3 points, and this is why I closed out my trade right here at this high. I actually had my trade set up to get hit at 816.12 instead of 816.13, which worked out nicely. Which is giving me time to produce this video right now. So with this now, I'm looking at this as being, we could go a little bit higher, but then by the time the market opens up, we could pull back. And if that pullback happens to make a higher low, in this level right here, I think that would be a very, very low risk long. There is a possibility that this could be wave A, this could be wave B, and wave C could come down to here somewhere. The deeper it goes to this, closer to here, the better it is for me. I would rather take a deep retracement because then when I do get up long, especially if it's hit a Fibonacci level, either in this area or this area, the deeper it goes to it, the better it is, because I have less at risk. If we come and we make within 2 ticks of this, and it's a fib level, and my indicators are telling me that it's time for the market to go back up again, I'm only risking 2 ticks because I know I'm wrong if we go lower than this level. So that's how I approach the market. You don't win every trade. But you know something? When you do lose, if you're very disciplined, you will only risk a little bit at a time. If I take 5 trades in a day, a lot of times I'll have 1 or 2 losers. One break even, 1 loser, and sometimes even when I know I'm wrong, I'll move it up 1 tick and I'll still walk out with 1 tick. I get stopped out, but that's okay. I'd rather have very, very small losers than break evens all day long and then just have 1 good winner. A lot of times that 1 good winner could end up doing very, very well for you. I already traded this with 1 contract this morning, so this pre-market. But I had $40 at risk. I made 300. To me, that's a very, very good risk. And that's just the way we trade all day long. And I trade basically using just Elliott wave patterns. As you can see, they're very, very well defined. And one of the things is, too, a lot of people don't like Elliott wave. They say it's subjective and this and that. There are a lot of big organizations out there that put out Elliott wave counts and so on. And, they're looking at multi-millennium and super millennial and crazy counts. Something, it's like, I don't care where you think it's going to go for the next 10 years. I'm going to take 50,000 trades in that time. But when you look at the patterns objectively, what's happening right now, it always offers you very objective areas, clear-cut areas to get in and out of the market. So I do suggest that if you can add Elliott wave to your analysis, you'll find that it will greatly benefit some of the other things that we're already doing. It's, like I said, it's pre-market right now. It's 9:07 a.m. I'm probably not going to take another trade until the market opens up. And I'm not going to chase the market up. I would rather wait for a pullback, a well-defined 3-wave pullback or sideways moving action that can determine what it is. Be a flat pattern or a zigzag or whatever, and then just move up from there. I hope you find this beneficial, and probably talk to you again tomorrow or the day after. Have a great day.